All right, so I'm trying something new. I'm going to go through this standard on auditing 501 specific considerations with respect to selected items. The selected items are inventory, litigation and claims, and your segment information. We always forget about segment information, but of course, we are more concerned about inventory. So I'm going to talk about my experience at an inventory recount, count, reperformance of count, whatever you want to call it. It was not audit, I would say. It is not inventory audit. It is just the count of inventory as per the standard, because we just follow the standards blindly, do we? So let us go through the inventory part of the standard, and then I'll talk about my experience and problems and rant more about the inventory count. So first of all, the requirement with respect to inventory. I can use my pen, I guess. Yes, I can use my pen. It should be red. When the inventory is material, so it talks about whether the inventory is material or not. If the inventory is immaterial to the financial statement, let's say you have inventory of 2000 rupees and your company's turnover is around 1 lakh, I would not consider this material. I would say it's hardly material, because of course you would say 1% of revenue is material. But let's say you have an inventory of 1000 rupees and your turnover is 10 lakhs. Now would you consider it? No, I would not consider the inventory material. So it has to be material. It has to be, sorry, it has to be a material account balance or a significant account balance. That would be more appropriate in the case we are referring to SA 315, 330, and 300. So the auditor shall obtain sufficient appropriate audit evidence as to the existence and condition. So the standard really asserts about getting information and evidence with relation to the existence, which is an actual assertion as per SA 315, but condition, which is not an assertion as per the standards, but it says we have to get sufficient appropriate audit evidence with respect to its condition. So condition here, I think they have misworded it, or just couldn't get the right word. I think they are talking about valuation of the inventory, because if the condition is not really good, the inventory might be impaired or would be sold less than its cost, which is the NRV is lower than its cost, so it would be impaired, so it would impact the valuation of the account balance. So attendance at the physical inventory count unless impracticable. So what could be impracticable? um, I have to do two or three inventory counts. Why do you take so many audits? Why don't you have the resources? That's not what we are talking about. The impracticability could be, let's say, pandemic. Pandemic was an impracticability. You couldn't attend your physical inventory counts, and it could be that the inventory is in a disputed area stated in Kashmir or some other state, let's say some northeastern state, Arunachal maybe. These are just non-political things. I would like to say I'm not politically affiliated to any party. So unless it is impracticable to do so, you would attend the physical inventory count. And when you are when you are attending the physical inventory count, I think two or three requirements shall be added here as well. First, you need to understand where the material inventory is kept. So you need to plan your inventory count as well. If the inventory is at one warehouse, you just go to that one warehouse. If the inventory is at three warehouses, you need to find which one to go at first. Or even just for that one warehouse, you need to find the material inventory. Okay, so you should understand where the material inventory is and whether the management has stopped the movement of inventory, because when the count is happening, you should stop the inventory movement, because it makes it easier. So evaluate the management instruction and procedures for recording and controlling the results of the entity's physical inventory counting. So we need to understand whether management has devised any type of procedures to in order to do the count or not. And then observe the performance of management count of procedures. So once we have evaluated the procedures given by the management for the count, we need to see whether the management's employees or the management, whoever is doing the inventory count, whether uh, the person at the stores, the inventory store, is doing the inventory count, or whoever is doing, we need to see whether they are following the instructions given by the management to do the inventory count. Whether the management has said, okay, you use a empty sheet with all the names of the item codes and write down the quantities, or whether it is ticking of the quantities. So these are the kind of instruction that would do. So if the management has just given a checklist of just you tick whether the inventory is there, so the employee might not get the sufficient appropriate audit evidence as to whether the inventory has existed, because you see the numbers, you don't have to fill them in, you just tick 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 tick. And if the management has given a blank sheet, it might take a lot of time to complete it. So you have to strike a balance between the two. And again, inspect the inventory, because inspection would give you the idea about existence as well as its condition. And perform the test count. So you need to, once you have evaluated the inventory count procedures given by the management and you have observed it, you need to redo it as well. So you will do some test counts. So you would pick up a few samples of inventory codes that you would want to count and redo the inventory count by yourself. And you have to perform audit procedures over the inventory's final records to determine whether they are accurate, whether they accurately reflect the actual inventory count results. So you can see this is a B requirement for obtaining sufficient appropriate audit evidence. So this is unlike you just don't have to visit the inventory count. You have to perform other audit procedures as well over the final records, whether they are accurately reflected in the financial statements as well. So it will also determine whether the inventory shown in the financial statements is as per the count or not, which is a very important thing because inventory can easily inflated to increase profits or even meet their margins. So that is a bigger problem, and which has been addressed here. Okay, I should erase it. It's looking not well. I think this is eraser. No, it is not an eraser. I think a control Z would do the thing. Okay, it's not doing anything. Ha. Okay, here is the eraser. It's fine. Okay. If the physical counting is conducted at a date later than the date of the financial statement, it's a very simple, straightforward way. Okay. I'm going to talk about it in a straight line. This is the financial year end. If the inventory count is conducted at this date or this date, we need to bridge the gap between these two dates. Okay. If the inventory count has been conducted here, but we did at some other date because we were unable to attend it. So in order to do some alternate audit procedure, we attended the warehouse to verify the existence of the inventory as such and condition of the inventory. So we would conduct the count or a sample basis on this date and we would bridge the gap between the two. Okay, by doing additional audit procedure. Only if it is impracticable to do so. If the auditor is unable to attend the physical counting due to unforeseen circumstances, they have to go to the count on an alternative date. That's what I have talked about over here. If that is some alternative date, you can go to that. If the attendance is impracticable, so one could be unforeseen circumstance and the other could be impracticable. Impracticable means impossible. You cannot attend the inventory count at all. So you would perform alternate audit procedure to obtain sufficient appropriate audit evidence. That could be very easy. I can tell you 10 procedures about it, but I would not because it's not a audit procedure masterclass. And then one of the audit procedure is understanding the delivery challans. If the delivery challans and the e-way bills match, I think the inventory is there because unless there is inventory, why would you be moving trucks? When the inventory under the custody and control of a third party is material, you would get the confirmation from the third party as to the condition and quantity. Very simple because the rate you will be determining. Na? That's all right. And it talks about condition. You should think more of it as valuation. So talking about this was the part of the auditing of inventory as per the standard 501. And talking about my experience at inventory count. So talking about the inventory count, my experience of inventory count, that is, I was on an audit and our client is a manufacturer of something related to electricity generation or whatever, distribution and generation of electricity. They make very heavy electrical machinery and relay panels and all that stuff. And I don't understand any of it because I'm a commerce graduate. Not even a graduate. I'm a commerce student. I'm a CA student. I don't understand what this is. The last time I remember studying electricity is V equals to IR square. That's all I know. So basically, I had the, what is it called, the stock statement or the stock sheet, whatever it's called. I had that in my hand and they have some weird inventory codes. I don't know what are these codes, and the codes are very similar looking for me. Something called 12 pp, 24 pp, 25 pp, and whatever. These are all specifications relating to very specific raw material for making those relay panels and those distribution or generation of electricity related products or manufacturing units or whatever it's called. So when I was counting them, I found that okay, 12 pp there are two pieces of 12 pp, 24 pp there are two pieces of 24 pp, and I could see that these are only stickers given by the OEM that this is 12 pp, this is 24 pp, and I was thinking, maybe they have replaced 24 pp with 12 pp, and just to make sure that the inventory is inflated. Might be the case, because skepticism, of course, I am very skeptical about it. But then again, I thought I should ask what is the difference between the two. He says there is something inside of it. This has 24 and this has 12. I thought, hmm, might be true. Can you show it to me? He said he can't, because once it's open, it's useless. So of course it's a very strange way to do. The problem with doing such audits, especially with technical things, it's not just something like you are auditing a chips manufacturer. Chips, no, not chips. If a chip manufacturer is there, how would you know whether it's the right chip or not? You don't have the technical expertise. So that's where I think the SA620 shines, but unfortunately it is not used as much as I think it is, or I think it should be. So SA620 should be used in that case, where an audit expert should be used to help us identify whether the inventory which is being shown in the stock statement, which has been shown in the item description of the stock, is really there or not. How can I tell what is the difference between a BOX TRP 12 pp and a BOX TRP 24 pp? I'm not technically qualified to tell about that. And secondly, the problem with condition, as to that condition, I could only say it has dust on it. I cannot talk about whether it is feasible to work with or not. They have a lot of feasibility. They are engineers. They can do anything. I believe in engineering a lot. So that was something a bit different. I couldn't comment on condition by the face of it. I couldn't tell by its face value whether it's in the right condition or not. Talk about valuation, I could only talk about valuation of these specific parts, because there is no fair market value for it. So we will have to wait for the subsequent sales of these parts. So we'd have to do it, this subsequent review part of it. We'll check the sales register and find out whether the inventory is being sold above its cost or not. So in order to determine whether the cost assumption, cost versus NRV assumption, is correct and is in line with the treatment of the Ind AS 2. And talking about some inventory at the third party place, we take the confirmation because there is some inventory at the third party place as well. So of course all these things were going through my mind when I was doing the inventory audit. And of course what sampling, of course I did stratified sampling. I cannot do the whole audit of inventory where there are screws and bolts all around in the shop floor, and you cannot count every screw, bolt, or a metal sheet or everything like that. You cannot count it. It's impracticable to do so, and it's not worth the time as well. So what you would do is just make a strata of like top 25 items. You would do 100%, and then you do gradually less, and for some items below a certain threshold, let's say you determine your own performance materiality for inventory count, and you do the audits. That's what auditing is, I think. So the inventory count was fun actually. I got to learn a lot about what the industry is and how the client really works. It gave me a lot of insight onto their business, but I really think it needs more of an expert than an article to just count. And I can give confirmation on the existence part. I cannot comment on the condition part. I cannot comment on the valuation part. The problem is that. And another point is, I want to say is they can never talk about completeness of inventory. How can I talk about completeness of inventory if I never know whether it's in third party's end? If I only got to know it's in the third party's end because it was in the stock statement and not within the store or on the shop floor. That's only where I came to know that the inventory is not complete. That's where got to know that I have to take confirmation from third party. I couldn't tell it from the right away. So I think completeness is an assertion which is so difficult to get assurance on. I think completeness, what we usually do for completeness is you would just make the lead schedule and tally the amounts from financial statement line item to your lead schedule. That's what you can do best for completeness sake. Or you can get external evidence. So completeness is an external evidence based assertion, which you can usually get in an inventory count. But of course, you would have to spend your time, you have to grind your day out, and I don't think that is worth when you are doing an inventory count for a small cap company. I think not worth it at all. There are better ways to get assurance on inventory. I think the best way to get assurance on inventory is to analyze the e-way bills. I think e-way bill is a very good product, or a it's not a product, it's a service. E-way bill is a service to us accountants, to us chartered accountants, not me. I'm an article, unfortunately. So e-way bill is a very good resource to get idea about the cutoff of whether the inventory was actually delivered or not on 31st, or whether it has been delivered at a later date. So you can find out that as well from the cutoff testing through e-way bills. I think that's the best way. And I guess that is all for this essay 501. I hope you like it.